bring in Rebecca Walser, the president of Walser Wealth Management, to talk about the markets and also about trade here. Rebecca, you caught the tail end of this very exciting day that most of us have been watching. The progress here, do you think it's enough to satisfy investors?
I think that this is a big, huge step. And let me just say, being on the stock exchange at the closing bell on a Friday with a phase one trade deal, Christmas Day, right? No, it's exciting. So obviously, we had a deal we thought ironed out in May, and then the Chinese delegation didn't sign, they didn't execute, they walked away. So we have to approach with caution. We need to celebrate our wins because we've had a lot of losses recently. So let's celebrate our wins and be really happy with what we've got right now. Let's get into the meat of the deal and see what it is.
Right.
But as far as I understand, I'm hearing from my sources that it basically says that joint ventures will no longer be required as of January 1, that American companies will be able to go 100% into the Chinese economy without any Chinese partner. And
That's
that is
huge.
huge.
Yeah.
That is one of the 7 deadly sins that we know China commits that Peter Navarro has stressed over and over and over. So this is huge news. I was expecting soybean increases and a pause in tariff escalation. So this is huge.
So what is the biggest takeaway? I mean, IP also announced in this agricultural purchases, and then additionally the axing of currency manipulation as well. What is the biggest kind of win packaged up in this phase one?
Brad, it's unbelievable. I mean, I just haven't even had enough time to digest it, right? We all have just been getting all the information, so I need to sit and read. But currency manipulation, IP, forced technology transfer, and non-necessity of a joint venture, those 3 things are some of the 3 biggest tipping points of our 7 major ones. So I think that this is very huge, and it's just exciting, and I can't wait to get into the details. And then again, let's see what gets dry. It's like lawyers. We talk about, oh yeah, let's have this deal.
Yeah.
Then we have to draft it down into writing and get the I's dotted, the T's crossed, and that's where things can go south. So let's celebrate this win, but we're waiting for the specifics, and let's see if it gets executed.
Devil's in the details here. Lighthizer, the trade representative, Robert Lighthizer, saying that President Trump has not actually made a decision yet about the tariffs that were subject to go in effect in December. There is now going to be at least a stalling of those that were set to rise on Tuesday, the 15th. What do you think is going to happen come December as we get closer to December? We know that was actually bumped from September to give retailers, companies some reprieve going into the holiday season.
Yeah, I think Trump is playing excellent chess here, right? Let's not give them October and December simultaneously. Let's give them October. Let's get this deal in writing, and then let's hold December over their heads to make sure that the actual writing is signed and executed and delivered. So this is really smart to not give both October and December simultaneously in this deal, and let's see if we can get the whole thing ironed out by December. That would be awesome. But if not, at least we've got a first phase 1 in writing and done and gone, and move on to the next, and then hopefully December will get paused and retailers can worry and really have a great Christmas, an actual Christmas, holiday shopping, right?
If there is a sector perhaps that's breathing the biggest sigh of relief,
right.
Do you think it's retail? Do you think it's agriculture, manufacturing as well? Some of them seeing their own mini depression or recession, right now in their sector.
Well, we got to keep in mind that manufacturing has been up for the last 2 years, and so yes, we've had a downtick, but that's been off of an uptick. So we've got to keep it in perspective. But yes, I think manufacturing is going to be happy with this. I think tech companies are going to be really happy with this non-joint venture requirement, and I definitely think agriculture was needing that. We want to see additional soybeans. We want to see the other additional commodities that are being purchased by the Chinese market.
Caterpillar, the biggest gainer on the Dow, on news of this. So to your point about manufacturing, of course, leading the way here.
Yeah.
I want to look ahead actually now and just to pivot quickly to earnings, which kick off next week. Bank of America, Wells Fargo, American Express, Netflix, also first to the FANG stocks to report. What are you expecting for earnings season?
There's been a lot of talk about earnings being depressed this season, and I think that that's going to be a little bit overblown. A lot of people are saying we're going to have some bad season, and let's just keep in mind that usually when we project a bad season, we definitely beat records. We had a lot of 75% of the S&P beat last time. So let's just wait and see. I think that we always lower expectations and then we come in with some beats. So I think that the market's going to be mixed. I think the news is going to be mixed. Yeah. But let's see. I think we're going to be overall. I think it's going to be it's overblown with the earnings misses and the expectations that the earnings are going to be down this coming season.
I think it also ties together though with the broader trade narrative.
Absolutely.
Because now for the forecasts, they are going to have to approach this thought of
That's
all right.
right.
Well, now we finally are seeing some calm
That's
enter
right.
into the mindset of our business operations as it turns to getting some type of trade deal
Right.
in the works.
Yeah.
What do you expect to hear in terms of the forecast commentary from companies?
Well, I think that they're going to be really pressed to make a forecast that really incorporates this phase one, right? Because we've seen China do this before, say, yes, we agree in principle, and then when the writing comes to be actually executed, they walk away. So it's going to be really hard to really, in this earnings season, get a forecast that incorporates this phase one that just literally got released. So let's see. I think that American businesses have been very cautious. That's why we've seen the slowdown in investments, because this has been an up and down 15 months of back and forth, and it's very hard to manage a business like that. It's certainly very hard to manage long-term investments, short-term investments. So I think that it's not going to be easy to be incorporated, and there will be a lot more caution than you would think, even though any kind of deal is a great deal at this point.
Yeah, absolutely.
All right, Rebecca Walser, who's the president of Walser Wealth Management, joining us here today. Thanks so much for the time.
Thank
to
you,
break down.
Brad.